Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to look at a company that I do not own in my portfolio yet. I am looking at currently this company because I think it will be a great addition to my portfolio, either this portfolio or the family portfolio. I don't really discuss much about the family portfolio, but one of these, I'm definitely going to add this company at some point in my portfolio. So I want to share that with you today. I've done the research and the numbers look really good. So I just want to share that with you and maybe ask you, even if you own the company, after I've revealed the company, if you can let me know if you own it and what you think about it. But before I do that, if you are new to the channel, subscribe to the channel, like the videos, let me know if you have any questions. And like I said, over this weekend, inshallah, I'll sit down and go over some of the questions that have been asked recently that I haven't had a chance to answer. Again, if you are new here, what I'm trying to do is share my journey. I'm not a financial advisor. I am just a regular guy who's just have a regular job and trying to put money to work by investing in the stock market and real estate. And the reason I want to do that is because I want to put my family and myself in a better position in the next 10 to 15 years, inshallah. I'm 35 right now, and inshallah by the time I'm 40, by the time I'm 50, 55, whatever it is, if I can retire or if I can just take a break without having to work for money and my investment are working for me, then inshallah would be a good place. And that's my goal. And this is the thing that you really need to remember, because in weeks like this, days like this, especially where the markets are really down. For example, just yesterday the stock market was down so much. Just this week it looks everything red. When you see this kind of things, it just kind of puts you off a little bit and you start worrying about the markets and so on. But generally what you need to remember is, what is my goal? What do I want to achieve out of this situation? Why am I putting all this money? I've invested 53,500 pounds into this account. I think it's less than that, but let's call it 53, right? 53,000 pounds in this account. I could just do a lot of things with that money. That could be a deposit for a house, two houses. In fact, if I go and get a mortgage, if I need to, I can actually go to up north in the UK and buy a property that's going to give me 500 pounds minimum every single month, right? I can do all of those things, but I am trying to do those things separately while I'm still growing this, because I do see a point in investing in the stock market, because generally that passive income that I receive every single month, it's just great. And I've shared that with you guys every single month. I've shared with you how much I get paid in dividends. I've shared with you guys how much actually I get from my investment in the property that I purchased recently. So I'm trying to be transparent and just kind of guys help you, people out there, and hopefully inspire someone out there just to kind of start investing either in the stock market and so on. And all the companies that I own in my portfolio, I make sure that they're Sharia compliant, and if they are not, then obviously I don't touch them, because money is absolutely nothing in terms of when you think about the hereafter than akhirah, if you think about it. Okay, so alhamdulillah, we're just going to try to be halal with everything, and at the same time try to invest as much as we can in the stock markets and so on. So yeah, that's my journey. That's what I want to do. That's the backdrop of everything that's happening. So when you're thinking about days like this, everything is red, just think about your goals. Think about 5 to 10 years. Is this portfolio going to be like this, or is it going to be like this by then? Okay, because when I started, right, and when I had 1,000 pounds, look at that, I had basically I was up 7% in May of 2020. I think that's when I started investing in this portfolio. Okay, and right now, as you can see, after basically just 2 something years, you can see where it is now. And inshallah, another 2 years I could hit at least 100 grand, if not more. So that's the goal, that's the ambition, and that's what I wanted to share with you guys. But let's now start looking at this company, okay? And the company that we're going to talk about today is Texas Instruments. This company generates over 95% of its revenue from semiconductors and the remainder from a well-known calculators. Texas Instruments is the world's largest maker of analog chips, which are used to process real-world signals such as sound and power. Texas Instruments also has a leading market share position in processors and microprocessors used in wide variety of electronics applications. This company is in the semiconductor sector. I've been interested in this company for a while now, and I'm genuinely looking at right now thinking potentially I can add this company to my portfolio. I do love this tech sector, and I've said recently I'm not gonna add a lot more, but this company looks really not basically good position right now. But let's have a look at the valuations, and then we will decide what I'm gonna do. I'll let you know towards the end what I'm gonna do. Okay, and one of the things that have actually attracted me to this and just made me do this video today is this bit here. So they've now came out just a couple of days ago and said, oops, let me see if I can fit this into the, okay, here we go. Let me try to fit it. Is a picture, right? So as you can see here, they've basically increased their dividend by 8%, okay, to $1.24, and at the same time 15 billion buyback. So they've authorized that. Now that 15 billion also now adds to the 8.2 billion they've already said they authorized a while back. So that is a lot of buying back their own shares, and at the same time increasing that dividend. So that's the kind of thing that attracted me to this company. Because in this kind of environment where everybody's just talking about doom and gloom, this company is increasing its dividend and also buying back their own shares at the top of the ones that they've already announced. So I want to know this, a lot more about this company, and let's see what it is. Okay, currently trading $163 per share, EPS of $9 per share, market cap of $149 billion. It has a wide economic moat, so that means they have a competitive advantage, and that they have a low beta. Normally anything below 1 is low, but 1.02 is not that bad either. So current PE is 18. Average 5-year average PE is 22, almost 23, and price to free cash flow we're looking about 25. So but looking at these two, I mean, it kind of tells me it might be a little bit expensive, but when you look at this sector, it's 24.74 right now, the technology sector. Dividend yield of 2.83, payout ratio of 48, which is quite low, so that's probably one of the reasons they're increasing, and 5-year growth rate of 21%. 21% increase, and they just increased it by 8% just for this year, which is absolutely amazing, right? Dividend growth streak, so without cutting their dividend, basically 34 years of without cutting that dividend. Okay, and I think it's about 18 years of increasing that dividend. So without cutting that dividend, or basically every single year, and sometimes it stays the same, sometimes it doesn't, but they don't cut that dividend for 34 years, and they have increased about, I think, 16 or 18 years, I can't remember right now. Dividend safety 90%, which is absolutely safe according to Simply Safe Dividend, and they have a free cash flow of $5.8890 billion. So they have plenty of cash right now. Now in terms of profit margins, this is what the other thing that I'm thinking, this is brilliant. Obviously this technology company, but 43% profit margin, operating margin of 51%, and return on equity 63%, and total return in the last 10 years is 20%. Current ratio 5, which means they've got plenty of cash right now in the bank to pay off, like in terms of assets wise. Okay, so they've got enough assets to actually pay that liability, to cover that liability in the next 12 months, right? Now let's look at the valuations. So next 5 years, they're expecting the stocks, basically the company, or the earnings, I should say, should grow up at 10%. Simply Wall Street is actually saying 16% overvalued right now. Their price target is 139. We're looking at about 160 something right now, and 130, let's call it 140. Right, Morningstar is saying is fairly valued, $166 per share, and that's probably where it is now, $163 per share. So they're saying it's fairly valued at the moment. TipRank is saying about 9% upside, 179. According to Yahoo Finance, about 185. And basically, according to TipRank, they're actually saying it's a moderate buy right now. And I'll be honest with you, I do agree with that moderate buy, because looking at the Simply Wall Street, looking at the fact that it's fairly valued at the moment, I wouldn't touch it right now. Okay, but let's finish this off and I'll tell you what I will be doing. Okay, so in terms of revenue growth, from total revenue since 2018, so 2018 they had $17.7 billion, then $14 billion in 2014, and this is really important. 2019, sorry, and this is important, and the reason I say that is because this is the kind of company, they're cyclicals. Basically what happens is 1 year they might be up, the next 2-3 years they might be down, and the reason for that is because if there's no enough demand for their chips, then obviously they're not gonna be, and there's it's not always there's a demand for chips. Okay, right now, yes, there is, but in the next 4 or 5 years, it might be, and then after that, there might be a couple of years where it cools off. But as you can see here, 2019 and possibly because of COVID, 2020, they had about 14.3 billion dollars, and 2018 was 15.7 billion dollars. So that's a little bit of a dip. Then 2021, they've actually increased about 18.3 billion dollars. So that's about another 4 billion growth in the revenue, and then 19.5 billion at the basically trailing 12 months. So it's interesting that you can see 2019 when there was a dip, 2020 there was a dip, and then it jumped again 2021, and right now it looks like it's going heading the right direction again. And the net income though, 5.5 billion dollars to 5, and then 5.5, almost 6 billion to right now. Well, 2020 was 7.7, and then right now 8.5. So that net income is absolutely brilliant. Despite the drop, the net income actually grew from 2019 to 2020. Okay, even though basically there was a little tiny bit of a increase in terms of revenue, right? EBITDA the same, 7.7, 6.9, 7.1 to right now 10, which is really good. And free cash flow from $6 billion to 6.8, sorry, so 5.8, 5.4, and then 6.2, and right now to 5.8. So there's been a little bit drop in the last 12 months. Again, you need to find out why that's happened. So if I want to buy this company, I would be looking at the 10K and just see if there was some sort of a write-off. Have they written off some debt? Have they acquired another business? Is it because of the whatever it is? There might be reason. It could be the buyback they've done. Whatever it is, we need to look at that and just see what is going on there. And in terms of shares outstanding, as you've seen it already, they authorized it, and it looks like it's heading the right direction. So since 2012, it's been going down every single year since 2012, which is really, really good. So yeah, overall, it looks really good. But in my opinion, I think I would definitely wait. I'm not going to buy straight away. I would, because the way the market is right now, right, I'm sure we'll get a better opportunity. If things are not improving in the next couple of months, I can see this company probably coming down to 130. In fact, let's check how the stock price performed in the last couple of months. So as you can see here, let's look at since year to date, we're looking about 14% down year to date. So at some point, okay, this year is actually gone down to 149, 148, and so on, right? Last 6 months, okay, the lowest it's been is about 149. So about 7%. Just this month, about almost 11% down just this month. That's very interesting. And the last 5 days, we're looking about 4%, but just up a little bit today. In fact, at one point today was up 2%. It looks like, there we go. It was up a bit, about 2% today because of that news, the fact that they've increased their dividends and so on. But right now, it looks like it's heading basically downwards. So yeah, it is a really interesting company. One final thing I want to show you is from Sharia compliance side of things. The company is 100% in terms of business activity is absolutely 100% fine. Interest bearing is only 5%, and then interest bearing securities, that's the debt, and then that's the security, both about 5%. So nothing huge to worry about that right now. So I would definitely put this in my watch list. I will wait maybe until it gets to at least 130ish, and then if it gets to that point, then I'll probably basically buy a few shares of this company. And as time goes, but I'm not going to put like, you know, the £1,000 straight away. I'll probably buy a couple of shares here and there, and then basically dollar cost average into it every single month or every single week as much as I can. Right, if you enjoy this kind of content, please like the video, subscribe to the channel. Let me know if you have any questions. I hope you are staying of course, you're not basically focusing on the price fluctuation, what's happening every single day. Think about the long-term horizon. Think about what you want to achieve in the long term, inshallah, and everything will work out, inshallah. Assalamu Alaikum. Have a wonderful day.